key events we have seen this week. So there are some exciting points to note. Let's start off in the United States of America with the FOMC Minutes. Now the tone for me was very cautious from the Federal Reserve, very contradictory I must say, from recent rhetoric that we've seen over the last couple of weeks. If you recall, a few members even noting that the Federal Reserve should disregard low inflation and that shouldn't stop them from moving forward with tightening of their policy and raising rates. Well, very much different to the tone portrayed in these minutes that we saw on Wednesday evening actually, where many of the members expressed their concerns with low inflation and that decisions going forward to be dictated by incoming inflation data. Many of the members saw another rate hike warranted before the end of the year, but that is pretty much priced into the markets. We are heavily anticipating one more hike before the end of 2017. So for me, I feel like the Fed are really losing credibility, chopping and changing with their stance, very contradictory. So for the dollar, in terms of what's going to save it going forward is we need to see higher inflation numbers. Otherwise, that is going to slow the Federal Reserve down in 2018 in terms of their hikes that they're looking to do throughout next year. Looking over in the UK then, a roller coaster of movements for the pound during Thursday's session actually, where initially the pound encountered heavy selling pressure across the board, really coming under some serious pressure after there was some comments coming out of the EU chief negotiator saying the Brexit talks had hit disturbing deadlock, which is not good. So they spooked the markets, people selling the pound aggressively as they were worried that Britain could walk away with nothing from the EU. But then later on, as the session progressed, at the end of the EU session, there were reports suggesting that the EU may provide Britain with a 2-year transition deal, which allows them more time essentially and gives them more to negotiate and just eases the pressure somewhat. So that did help the pound erase those initial losses and actually gain further. So for me, as I've expressed on a number of occasions with the pound, I still think there is a lot stacked against it if we're looking over the long term. Economically, it isn't great in terms of the picture for the UK for this in this very moment. But in the short term, I can see that there is a bit to support it. Obviously, this potentially, if they are provided that 2-year transition deal, and separately, if the Bank of England do follow through on these expected hikes that they've heavily hinted at for potentially November. Lastly then, looking in Europe, Mario Draghi was heavily anticipated by the markets. He did speak on Thursday over in the United States, where he did reiterate the guidance for rates and also quantitative easing. He did say well pass is very, very important in anchoring rate expectations. So in terms of his stance, pretty much reiterating or sticking with the very accommodative position, and it is dovish, I must say. In terms of what we can expect for QE, we're not expecting for them to taper until at least the very end of this year, if not early 2018. So for the euro, for the time being, expect that to continue to edge off slightly or drop slightly across the board. Just of note, much of us are looking at euro dollar on a daily. There is a head and shoulders formation. The right shoulder is currently forming at the moment. The neckline is seen just below 117. If we do break that, there could be some potential for some serious downside towards 114 and below. On that, I hope you've had a great trading week. Thank you.